or happy we can start, right?
Yes.
You love it. Thank you very much for joining us. Uh, as everyone knows, due to Corona, things was totally, even I didn't ask everyone having a proper vaccination. This is the worst impact of the Corona. So we are going to start again those sessions. The main agenda, the purpose, to just exchange the knowledge. Because we are not here is like a theoretical people, we are a practical people and handling more than 100 clients. So we are going to start again the practical things which are very much important to know each other. My name is Shafiqur Rahman. I am a partner in Ahmed Electric Chartered Accountant, and luckily I am approved FTA tax agent having TAN 20008199. So it means if someone is really looking for a tax agent, I am there to help you. It is a long journey, but finally you can achieve. Ahmed Electric Chartered Accountant, we have 5 offices which are providing financial, auditing, accounting, due diligence and value-added tax services. Once again, we will welcome you to on our platform. I would request if we can manage to sit each other. Normally accountant, they know how to adjust in a position. We will try, and I appreciate someone more near to me. Before going to the formal presentation, may I know how many people they are really practically involved in submitting the VAT return? Great. How many people they are on visit visa looking for job? Good. Almost everyone know what is stand for VAT?
Yes.
Great. Everyone knows the kinds of the like the tax implementation. There is a standard, exempted, and the zero rating. So it means we are talking with the people having a basic knowledge, and everyone knows VAT return is applicable on quarterly basis. Is there any company there is VAT have to be returned on monthly basis? Anyone knows? Okay, monthly basis. So what is the criteria? Trading. Good.
The big companies which have big turnovers, not
Right.
there.
So it means we have the knowledge, but we don't have the exact knowledge. A company having more than 100 million, right? Turnover, so they have to submit the return monthly basis. So the reason to talk each other, everyone must have the exact general knowledge, proper knowledge, because UA is now going to enter into the corporate structure, and then only the person who is going to survive, who have the real knowledge, not theoretical knowledge, because now we are going to enter in a market where is the corporate tax is there, compliances are there, and the real knowledge is there. Now we are going to discuss with you only the basic thing, value added tax and the submission of the return. We will continue in our coming days more session with the latest topic, but today we are going to keep only the practical basis person while submitting to the VAT return, what type of the things he required, what type of the documents he required, information required, and how a normal person he can understand and submit the VAT return and fulfill the compliance of the Federal Taxation Authority. So I am going to introduce Mr. Usama. So if you want, we can clap little. So please have he is member of ICAW, and I think this is his first presentation, and I'm really happy he take a step and going to share with you the practical thing. Don't treat us we are a teacher or like a speaker. We are a practical thing, which is practically that while the car is punctured, how to manage a puncture rather than having a thesis or a lecture. So I would request Mr. Usama, please come on a dais, and we have a very small session around maybe 20 to 30 minutes. Then I hope you have number of questions. So we will be happy to have your answer of all your questions. So after the presentation, we will keep connected each other. So in release, Mr. Usama, join us. Yes, please.
Good afternoon, everyone. My name is Osama, and I work here as you could say a senior associate, handling assurance and indirect taxation assignments. So from the previous 2.5 years, I've been working in VAT, handling a portfolio of different clients, and I'll be sharing my experience on a basic level with you guys. So if anybody wants to complete or file a VAT return, he can have the necessary knowledge and supportings as well along with the working file present at his system, or you can say that. So moving on, contents. VAT filing is you could say has 4 components basically. There'll be VAT on sales and other outputs. Second component, it would be supplies that are subject to reverse charge provisions. The number third would be goods that are imported into UAE, and the fourth one would be standard rate expense that are claimable and that offset your claimable, your payable VAT, and in the end you will be able to get a net position. It would be sometimes payable or refundable depending upon the type of quarter that your entity, company, sole establishment, or the individual natural person has had. So moving on, VAT on sales and other outputs. So VAT on sales and other outputs, there are basically you could classify in UAE. There are 4 types of sales that are present. There are the standard rate sales. Those are on which we charge VAT at 5%. Such sales can be a provision of service or a provision of goods from one party to another. The second type of sale would be a zero rated sale. A zero rated sale can be within the UAE or an export of services or goods. It depends upon the nature of the supply being made, and there is you could say a point here where the place of establishment of the supplier or vendor, you could say that will be us, and our customer, wherever, if he is present in the mainland, outside UAE, and the nature of the company that we are operating, our operating activities. The third type of supply that would be present is the exempt supplies. The exempt supplies present in the mainland. There is, you could say, it is also dependent upon the nature of the supply being made. For example, Dubai Metro, or you could say taxi, Dubai taxi, Abu Dhabi taxi. So the sale of residential buildings after the first supply has been made, those are exempt supplies. Moving on, there is a fourth supply present as well, that is the out of scope supplies. These supplies are not reported to the in our VAT return, the out of scope supplies, but we have to maintain a complete record with the relevant supporting documents at our end, if we are, because authorities can ask during a tax audit regarding the supplies, total supplies being made, and they are part of our, you could say, financials as well. So what are the out of scope supplies? For example, you bought your company is present in UAE mainland, and you bought something from outside UAE. For example, say country A, that could be any country. For example, you could name it Australia, Brazil, and you ship the goods to country B. For example, it could be any country. For example, Venezuela or China, and the goods, they never entered UAE. So those would be out of scope supplies, and there are other supplies as well that fall under the same umbrella. But roughly, this is the, you could say, classification. Supplies subject to reverse charge provisions. Supplies subject to reverse charge provisions are reported in box number 3. Those are services, for example, mostly services that are rendered and the VAT would have been charged on them had the services being provided in the UAE. For example, solicitor services provided to your client in or your company in, you could say, Europe, North America, South America. But if the service has been legal service had been provided in UAE mainland, VAT would have been charged on it. So we are going to report such services, and in box number 3, we'll be calculating VAT at 5% on those services and report it in box number 3. Apart from it, the second part of the RCM would be goods imported into UAE. Most companies importing goods on a regular basis have, you could say, their own custom codes linked with the TRN number. So when the goods are imported into the UAE mainland, the custom department clears the goods, and the imports are directly auto-populated on our portal. There is a further box, that will be the box number 7, that is adjustments to goods imported into UAE. This box also has a purpose. This box also has a purpose, that is, you could say, for example, our goods, we didn't have a custom code, or maybe due to the shipment, the clearing agent cleared our goods, or from some other source. So we are going to declare to the authorities the goods that were imported for our business use in this box, box number 7. And furthermore, there can be, I have seen such cases. For example, a company has a custom code directly linked with its TRN, and there could be, you could say, an import being populated that is not part of its VAT return or not part of its, you could say, imports, and it was erroneously added into the VAT returns custom, you could say, imports. So we have to make the necessary adjustments for these imports. Yeah, there's another key point. There is such a thing that is present in box number 2 of the VAT return. I'll be showing you a sample VAT return later on, so you will be able to align these box numbers as well. The tax refund for tourist scheme. It happens with some companies where, as Dubai is one of the leading tourist destinations globally, tourists, the government has offered incentives to the tourists that, for example, and to these local sellers, that if a tourist comes into and purchase goods from the relevant companies, they are registered with the government and with the necessary departments, and they have, you could say, some stamps present with them, some e-tags. They'll be logging them onto the invoices. The customer, while going through the airport or going by the ship, will be able to get a refund for the same amount as mentioned on the invoices, and the company would be paying that amount back to the company that refunded it. So mostly Planet is the company that handles such invoices in Dubai. So moving on. Standard rated expenses. Standard rated expenses are business related expenses that are grossed up from the 5% of VAT that has been paid up. There are some key points that have to be addressed while claiming VAT, because this is one of, you could say, the crucial parts of filing a VAT return. Because for example, if we are reporting our sales, we have an actual knowledge of the amount of revenue that was booked in our system and its relevant classification, whether it was exempt or out of scope, or whether there was a standard supply, whether it was in export, because we made those sales. For the expenses, each and every company and each person wants to pay less and less VAT for the purpose of tax avoidance, as is their right deemed fit. But I'll take my pause. So coming back, I guess that during this time, each and every one of you would have read the pointers that are present on the screen. So there are some key points that you will be looking for while claiming your input VAT, because it is one of the crucial parts while I've had during the tax audits of a company and during the refund process while you're claiming some money back from the relevant entities. For example, if your working files are top notch and your supportings are present, then claiming 100,000 or 1.5 million, they are not. It's not an issue if the data present at your end is or has all the relevant supportings present. So yeah, adjustment for adjust your data for non-claimable VAT. The number one thing that I have seen in this scenario is the, you could say, entertainment expenses that the business is claiming for itself. For example, a staff party. For example, a shareholder or a director came and stay at, you could say, a 5-star hotel. For example, some prospective clients that you had and their entertainment. For example, there was an international convention or an expo sort of thing going on, and your staff, your relevant staff attended it for business promotional activities, but it's directly not relevant to your nature of supplies that is being made. So we can, in most scenarios, in most scenarios, we will not be able to claim it up. Moving on, there's another thing that is anything, any expense that is being provided by the business as a benefit to its employees. In this scenario, the directors of the business, the managing director as well, is an employee of the company, right? For example, any car that is provided to the employees, any cell phones that are provided to the employees, any other sort of expense. For example, I saw while filing this month's VAT return for one entity, I saw it had given its one of its directors some gold as gift. So that was, you could say, approximately amounting to 200,000 or 300,000 gold. That was given to one of the directors of the company as a gift. He was a salaried person, so it was part of its other benefits if we will be looking at it from the IFRS perspective. But for the VAT, as per the decree law, we cannot claim such expenses because they are not relevant to the business activity of the company. The telephone bills, my company has provided me, you could say, a postpaid SIM, but I also use it for my personal use, as do all the other people that have their own SIMs provided by the company. except the scenarios where the business use is monitored as well as the personal use is monitored by the company. Where it's monitored, then we'll have to apportion out the portion of expense that is directly relevant to the business use, expunging from our claim the input that is relevant, you could say, to the personal use of the employees. Furthermore, insurance bills. Insurance for all the staff is a legal requirement for the company, but for some staff, the company is also paying the insurance of its the dependents. For example, you're working for a company, the company is paying the insurance of your wife, the company is paying the insurance of your children, the company maybe is paying the insurance of any other person that is related to you in any other scenario. So we'll not be able to claim such dependents while within the jurisdictions of the Emirate of Dubai. And for Abu Dhabi, I've seen a case where they disallowed dependents where the quantity was more than 2. So apart from it, yeah, that's the key point. Anything that's not relevant to the business, just expunge it out. And yeah, so moving on to the our topic of today, that was filing of the VAT returns. So I just gave all of you a briefing about the relevant heads, and now we'll look upon some of the requirements as per Article 64 of the decree. So, tax returns must be received by the authority no later than 28th day following the end of the tax period. 28th is the deadline for filing the VAT return and making the payment. Even if you have filed your VAT return on 26th and you submitted your payment to the bank or through, you could say, a money exchange, and the payment was not credited into your account or the FTS portal by, you could say, the end of the 28th, they'll be issuing you a penalty on it. It depends upon the exposure that you'll have, depending upon the amount that is payable. There'll be a fixed penalty, and as well, if you the payment gets delayed by more than, you could say, a week, then the gate element of the penalty will also be more. Furthermore, a person whose registration has been cancelled must provide a final tax return for the last period for which he was registered. While deregistering, for example, there are numerous reasons why a company has to deregister from VAT. For example, the number one reason would be the company liquidated or ceased operations. The number two would be that our supplies fell below the mandatory threshold of 375,000 AED, and so we had to inform the authorities and get re-registered as per the relevant legislation. Point number 3, the taxable person shall settle payable tax in relation to a tax return using the means specified by the authority so that it is received by the authority no later than the date specified in clause 1 of this article. That is the 28th. So in whichever case you are filing, 28th is, you could say, the last date for you. The month can be 31 days, the month can be 30 days, the month can be 29 days, the month can be 28 days, except the scenario when the 28th is falling on an official holiday announced by the government of United Arab Emirates. And in most scenarios it would be Sunday. Now previously it was Friday, but now it's Sunday. So if your 28th is falling on Sunday, then they'll be giving you one day as a rebate for that day. So you'll be filing it out on 29th. That will be a grace period, as you would say. So moving on to the fourth point, when recoverable tax for a tax period exceeds due tax for the tax period, the excess recoverable tax must be declared to the taxable person in accordance with the relevant provisions in the decree law and federal law number 7 of 2017. The federal law number 7 2017 has seen some amendments, but the onus of the law remains the same. A tax, yes, this is the main part that you guys will be looking up to. A tax return must contain such details as the authority may require and at the minimum allow for the following information to be included. So your working files, they should be top notch. When you are preparing for your VAT return, the supportings that you have should be part of your working file when you file for the VAT return. So in the near future, whenever the authority, that in this case it will be the Federal Tax Authority, aka the FTA, asks you for any relevant quarter, you'll have the necessary details present in your Excel, and the relevant invoices can present at your in the relevant folder with the necessary backups there. Yeah. The name, address and TRN of the registrant. In this case, it will be us making the taxable supply. The number one thing would be our company XYZ, in national person, his name or whatever. The name of the person should be present. His address should be present. The address could be the PO box, the office address, or any way through which the FTA would be able to establish communication with the relevant person. Your phone number should be present, and your TRN number, that would be your tax registration number, on which should be present on all your sales invoices. I like to add a key pointer here as well, that if you buy something from somebody and the TRN number of that person is not present on that invoice, he cannot charge you VAT on it. Legally he cannot, because he is not entitled to collect VAT if he is not registered with the Federal Tax Authority. Moving on, the tax period to which the tax return relates. For example, in this case, right now we are present in March. So the previous tax quarter would have been December 2021 till Feb 2022. Or if a company is making its monthly returns, the tax period would have been February 2022. The date should be mentioned as well. The date of submission or the date of provision of the invoice. For example, I bought a good today. Today's date should be mentioned on the invoice. The invoice should be titled tax invoice. The amount of or the consideration that is paid to the person, or if a credit term is agreed, the details should be present on the invoice. For example, 100,000 amount and the 5,000 VAT that would be chargeable at 5% should be present on the invoice. Moving on, the value of exempt supplies made by the person in tax period. If the supply is exempt, it will be mentioned on the invoice and the details present in your working file. I'll be showing you the working file as well at the end of the presentation. The value of any supply is subject to clause 1 or 3 of Article 48 of the Decree Law. Value of expenses incurred in respect of which the person seeks to recover input tax and the amount of recoverable tax. We have discussed already the input tax. That is in itself simplified. If I present it to you, anything or any expense rendered that is directly attributable to the supply of the business being made. The total value of due tax and recoverable tax for the tax period, that will be the tax that is payable if the supply is standard rated, and that the input tax that is offsetting that payable and giving us a net position of the supply, that would be a refundable position or a payable position. I'll just be moving on to questions later on. I'll just like to show you guys. So this is
presentation file, PPT file. So it's not PPT, it's not on, just open the old file. Just you have to close and let's go to question answer. I don't think so anyone, he didn't get chance to see this return, right? We want to show you just the return. Everyone knows the return, no?
Yes.
Good. Basically, if everyone knows the return, so he is going to share with you the return, how's the return. So if everyone, he knows the return, so no need to be if it's not opening.
Yes.
Now let's come to the question and answer. Before going to question and answer, I want to see like you have the basic thing. Like for example, if any company, he have the quarter from 1st January to 31st March, what will be the date for submission of return? 28th of April. If I'm submitting return on monthly basis, so it means the subsequent month will be 28 days. Now practical what happened, people they are using the e-payment, so you can pay payment till 28. But if you are paying through the exchange or through bank transfer, we normally advise you to submit at least minimum 2 days payment before. Why? Because it takes 2 days to transfer. A lot of people they said we have already payment. I don't know why the fine or penalties is coming. So there is these are the basic things. As a good accountant or person is going to join any company, he must knows how to apply for the TRN. This is the first thing. The employer is looking. You must know to help him how to apply for the TRN. So it means very simple. You have to create an email account. You have to go to the eservicetax.gov.in. Then you have to create an account like a Google or like Gmail, and then you must know the list of the documents required. And you have to apply. And when you submit all the documents, then there is a pending, and then authority will review, and then they will approve. They will issue you the TRN number. So this is the first thing. Second thing, as per the TRN, you must know when you have to file the return, and when you have to file the return, then there is 2 things you have to know. VAT is applicable on supply of goods and so it means where you are issuing the invoice or you are receiving the invoice. So your involvement of tax is there. This is very simple. Majority of people they are saying I got the bonus, I make payment to supplier, I receive payment, I have advance payment. My dear, wherever you see supply of goods and services and issue of invoices, involvement is there, so it means you have to see that tax matter is there. Very simple. So these are the basic concept which I must hear. Now, according to your industry, someone is dealing into the real estate, in general, in the construction. So these are the typically knowledge. So you must have the relevant knowledge according to your organization to whom you are working. Like which thing you have to be taking. For example, all state-wise, Carrefour have like branch in Abu Dhabi and branch in Dubai. So it means if any invoice issue from the Dubai, it will be done in the Dubai output, and we are taking. So we are dealing 2 things, input tax and output tax. If input tax is more than output tax, what will be my position? Good. If there is a refundable, so assume that you must have the proper documents because authority is going to check all the documents. To say from this one, people they say no, we will carry it forward and they are not going to the refundable. So this is all on our part at the moment. I think we want to keep more simple and easy. at the end, if you have a question, luckily we are not going to charge you. You can ask any question.
So just continuing your last point, if we had refundable, like, what are the deadlines to claim that? Like when we can request for a refund?
5 years.
5 years.
5 years. You have to maintain your working files for 5 years, as is with the audit of any company that you have to do. For 5 years, you have to maintain your working files. From the quarter that you have filed, you will be able to calculate the number of years or the months that have passed, and the following time that is there for you to maintain those working files along with the supporting documents.
So that means if I file a return in January,
Yeah.
so I have 5 years.
5 years from that year, in January which year, to 21x, from that to 21x plus 5. Yeah.
Addition to this, for example, you have already finished 3 years or 2 years. Now we are 2018 to 2022. You miss many quarters for refund. You can apply also. And each refund you can apply from quarter to quarter basis.
Right. So it will be with every filing.
Yes. Don't expect like you will claim all together. No, each refund will be basis on the quarter to quarter basis. And they will treat refund on each quarter basis. That will be not linked with any other quarter. If you are applying 3 quarters, the authority will deal you each quarter basis. Once you fulfill their requirement, maybe they will return you that refund.
Yeah, Mr. Shafiq is telling, technically you can claim a consolidated refund for the whole year or for the whole past 3 years all together. But the thing is that the authorities, they'll be auditing you on, you could say, asking details for the relevant quarters. For example, there were 12 quarters in the consolidated working that you provided them. They'll be asking you necessary details for, you could say, quarter 1 and quarter 7, quarter 6, and then they'll be asking quarter 5. It's a rigorous process then. Then you will be, and you have 5 days from the time that FTA shoots its question to answer that request. Otherwise, your application will go on a pending list.
Any question?
I have one question.
Only one? Okay.
No, more question, but this is related to designated zone.
Okay.
Normally, if we are going to supply the goods to outside, it is a
Outscope.
No.
From the
It
designated
is
zone.
no. From if we are going to supply the goods from mainland to outside UAE, it is like considered as export
Yes.
and as considered as zero rated. But if there is company, normally designated zone is considered as out of the scope, right? But if there is one company who supply goods from mainland to designated zone, services are good. There is 5% VAT.
Yes.
But why is 5%? Because it's considered as out of scope, it means it should be zero rated.
This is your valid question. The thing is that designated zones, first I will be shedding light on designated zones. There are numerous free zones present within, you could say, the United Arab Emirates, within each emirate individually. So in Dubai, there are numerous free zones. For example, DMCC, that will be, you could say, everybody will know it as the JLT area. So it's a free zone, yeah. But the Jebel Ali free zone, it's a designated zone. The difference being that it is fenced. There is check on the movement and on the movement of goods and personnel from in and out of the designated zone, and there is customs present at that at every exit. So, for example, for services, as the service is provided within UAE, the recipient is present within UAE. Basically, the designated zones are places that the government has provided to different companies as an incentive to come and invest, and provided them with certain benefits so they can operate in those zones and bring some economic activity within that country, and they are present globally everywhere. So for the service, technically when I will be speaking about the service that is being rendered within the UAE, the provision of service within the mainland, and for service it will be such that all the designated zones, all the free zones, all the mainland area is treated as on the same basis. For example, if I provide a service to a company that is based within the geography free zone, I'll be charging VAT on it.
Yes.
Because the service is provided by me, present in UAE, and is received by an entity that is present in the UAE. But if the goods are received, goods are separate in nature, if the goods are supplied by me to an entity that is within a designated zone, then certain rules come into play. For example, will the goods be consumed? Will they be re-exported? Will they be sold within the designated free zone, and will they be again consumed or re-exported, or will they be further processed? So there is a difference in each scenario. So VAT would be charged on the goods that are being shipped into the designated free zone by my entity. And for example, if somebody uses a water bottle within the designated free zone and you buy it from the free zone, VAT is charged on it, right? Goods are consumed. If you buy some goods within the free zone and you're going to export it, you'll need to have the necessary, you could say, custom documents present. If your supplier has charged VAT on it as well, and you go back with the necessary export documents, he'll refund you that amount. As this this is a practical solution, I suppose, sir.
Actually, from you have to see simple understanding consumption point of view. Like ultimately, the VAT burden of VAT is on consumer point of view. As you know that there is no VAT on the business. So ultimately, he is going to explain like consume. You have to see from scenario to scenario basis. I think consumed in free zone or not, either re-exported, either re-further processed. So depend upon that. But for normal understanding, if someone is exporting, then it means out of scope. And
From the designated free zone. Does this answer your question, or the question still stands?
Still stand.
Can you repeat the question for me?
Actually, okay. There are like 41s around about free zones in the UAE, in which 20 or 21 are designated zones. But the other free zones which are not designated are considered, the VAT is considered same like mainland. For the designated zone, it's some like different. So if we are providing the services or goods from the mainland to designated zones, services are goods, then 5% VAT will be applicable.
Yes.
But if we are going to export goods from mainland outside the UAE, then there is out export and considered as zero rated. As designated zone is considered as out of the UAE. So why is there coming to different scenario?
Okay.
In designated zone, if we provided services good 5% VAT, but because designated zone is out of UAE. But if you provided good export of the UAE, then it's considered as 0%. So I want to know about the difference.
This is how the law is. Let me address your question. This is how the law is. Designated free zones, for the companies that are present within those zones, they are technically outside of UAE. Right? For example, if you go to the airport, you are within the UAE, or any other airport, you are within that country. But once you get your boarding pass, and once you make that exit from the custom, and once you are in the waiting lounge, you are not present legally in that country. You are in a no man's land, right? For services, it is the rule is stated as such that if a service is provided to a recipient, if he is present within UAE, services are different categorically. Services different to the goods. There's a differentiation between them. Okay. So for services, it will be such that if a service is provided to any person present within the UAE by a person or company by X to Y, X is within UAE, Y is within UAE, anywhere, mainland, free zone, designated zone, anywhere, 5%. Simple. This is how the law is. You can say that 1 plus 1 is equal to 2. Why is it 2? It's somebody who named it as such. So this is for the classification for it. Anywhere for the service is 5%. Right? If the service is provided outside of UAE, It is, for example, if you are working you're providing a service, uh, banking service, or you could say banking would not be an appropriate example. For example, if I'm providing a service, consultancy service, to any party who's present outside of UAE, it would be an export. So it would be zero rate. For the goods as such, now service part is cleared at your end.
Yeah.
Anywhere it's
Yes.
fibers. You could say petrol, right?
Yeah.
So for the goods, it would be such designated zones. Now, technically, they are not part of UAE, as you mentioned yourself a while ago,
Yeah.
right? So if you make an export from the company that is present there, what does the scenario means? It means, for example, the goods entered into the designated free zones from, you could say, the harbor, or you could say the airport, because there are some designated free zones like Dawza, Dubai Airport Free Zone.
Yeah.
It fence, right? Goods entered from the relevant mode of transportation provided, and they were re-exported. They never touched the customs. They never had no dealing. They never came into the mainland, and so such goods need not be declared in the VAT returns till now, because the authority is not asking for the out of scope supplies. If in the future they amend it, then maybe you'll have to. But right now there is no requirement to report the out of scope supplies unless you are going for a refund. Then you have to give the necessary details. Moving on to the other part of your question, for example, if a company is present within the mainland, if we provide them with goods to designated zone, now who made the sale?
The mainland.
Yeah, they'll be charging VAT,
Yeah.
because you cannot give them a surety that the goods are going to be exported. See, within the relevant necessary time frame, if you came back to them and you said that, oh, I re-exported the goods and this is the custom declaration along with the exit certificate of the relevant goods that are provided, have been provided, then they'll say, oh, okay, we'll refund you that amount, but if you have the necessary supporting documents present. Otherwise, that entity is going to charge you 5% because he is making a sale locally. Where are you buying those goods?
From the mainland.
Anyway, but you do not have the supportings right now, right? So they will be charging VAT on it, because if you are saying that I'm taking it out into the designated free zone and from there I'll be exporting it, but you do not have the supportings present. When you have, you can go back to that guy. If your necessary details are present on that invoice along with his, and the transaction is in your name, that will be the entity or the sole whatsoever, the legal definition, you'll be able to claim that, right, sir?
There is if you go FTA side, it's better if you study and write place of goods and services. If you have a very good concept, believe me, you have all answer of your question by yourself. Just FTA side and write place of goods, because this is also very much important to understand. While
You
dealing
got an
with-
idea? Did I answer your question? Thank you.
Thank you so much.
Many places already they have different. Like if I just give call here to the lawyer and take his opinion, suddenly I call UK. So it means both places we have to see from tax point of where is the services of goods and place of the goods and services. Any other question?
This one head office, they have branch outside UAE.
One head office.
Head office have branches outside UAE.
Okay.
And this CFO managers, they are going there.
Okay.
And they are providing some, for if CFO was some accounting service he is providing outside UAE. And they put management fee, branch to head office.
Yes.
It is out of scope or 0%?
Zero.
Zero rate.
Because service is never out of scope. Service has two criteria: 7 rated
No,
or
no. Let me understand the question. You say the head office in Dubai,
Yeah.
and the guy, the manager, he is going to out of UAE,
Yeah.
and the branch is there.
Yes.
Branch is giving invoice. Who is
No,
giving
no,
invoice?
head office giving.
Now the
Because for
question.
that service.
Head office services to the branch, and head office is issuing the invoice.
Yes, sir.
Again services. Now again, where is services has been performed?
Services provided outside UAE.
Now you understand, like the place of services and goods is how much important. if you want keep the question in this perspective, you have your own answer of your question.
That means zero rating, not out of scope.
Because the people went from here to provide the service, right?
Yes.
So yeah,
That is the export of services.
dynamic export of service.
Now you clear means you have to first see the place of services has been rendered. Who is going to issue the invoice? Now this company issue the invoice, he have three options: exempted invoice, standard rate invoice, or zero rated. Out of scope there is no invoice. Na? So he have to issue the invoice. So when he issue the invoice, because services or goods has been done or executed in out of UAE, so he will issue the zero rated.
Continuing on the same question, if the invoice is raised on the head office, by the head office,
Head office, okay.
it's raised by the head office and the service is provided outside, and the invoice is raised on the branch which is present in UAE, but the service is done outside. So what will be the case in that?
Like you say, head office and branch both are in UAE.
Okay, just leave head office and branch.
I leave, na?
The service-
I leave both things.
service-
Don't worry.
service is done for-
I don't have anything. Only we are on virtual basis.
Service is done. Service is provided for some company based on Oman. Okay.
Okay.
And invoice is raised on a company which
It's
is
from
in
UAE.
UAE.
Invoice
But-
issue. He asked the question.
But the service is done outside, and the invoice is done on the company in UAE.
Yes.
So it's
VAT would have been chargeable on such supply and it will be reported under box number 3 RCM.
Which one?
A reverse charge mechanism. It will fall under reverse charge mechanism. You will be calculating 5% VAT on it and reporting it under box number 3.
I mean, is it
Your
refundable
question
or-
and his question is same. He is also having the same question. Like the company issuing invoice from UAE, but services, performance, everything done in out of UAE, right?
Yeah,
This
but
is
the,
the same.
but the invoice is in the name of the company which is present in UAE, but the service was done outside.
Ah.
This is what I understand.
They have issued the invoice from
Dubai
Dubai to UAE basis, na?
The customer has its head office in Oman
Hmm.
and it has a branch in UAE. So the invoice is raised in the name of branch, but the service was provided in the head office in
Good
Oman.
question.
Branch in this scenario would be a
What's the
legal
solution?
entity in its own right, right?
Yes.
It will be LLC or
Trade license, everything is there.
everything is there. It's a legal entity in its own right.
The head office in
So you can just a separate company provides the service and the service is provided as per your scenario outside of UAE, right?
yeah.
And that company charges the company that is present here for the service that is provided, right? So VAT would have been charged on such service if the service has been rendered within the UAE, right? So it will be reported under reverse charge mechanism in box number 3 of the VAT.
Basically, we'll follow the invoice or we'll follow the service.
But we are not
This is what I'm
directly
Follow the
exporting
services, no?
services
Services
in the
have
outside.
It's an expense, it's not a sale. We are rendering, it's our expense, right?
Yeah.
We are being charged for it. It's not a sale.
No, for me it's a sale. From
They
my
are
perspective,
providing
it's
the
a
services.
sale.
Do
I'm
you are
providing
present in
services.
UAE?
Yeah, I'm
Okay.
providing services to a company within the
Let
Oman.
me repeat the question.
It's a
Both
practical,
companies are in
issue
UAE.
I'm having with my
Both
company.
companies are
Both
UAE.
companies are UAE, but services is out of UAE.
Okay.
Like company A in UAE, company B in UAE, they are issuing the invoice,
It's
but
the name of
services
company.
rendering out of UAE.
Yes.
This is his question.
Yeah,
Right. Both have a permanent place of establishment with an UAE mainland.
yeah.
Both are present in
Yeah.
mainland.
The contract was given to me by a company based in UAE, but I provided services outside,
So it will be zero rate.
zero difference.
So there's 5% variability because we are providing the services
From
which is
here.
existing in UAE.
No, service if the had been provided from here, but service is being performed there or there.
In Oman.
In
It's
Oman.
in Oman.
But we invoice to whom? We invoice to the
To a company
supplier
which is
in
established.
UAE. In 5% will be applicable.
I think we rechecked rather than giving wrong. We are
No,
not
because I'm
PhD
having
for
a
everyone.
practical issue.
I have seen three,
Yeah, we are
four
also doing-
scenario practically. Somewhere they have issued the invoice with the VAT because they said you can claim.
Hmm.
If both authorities are here, they will claim. They say we are, if you are charging, you are claiming. So it means there is no VAT. But somewhere they prove that like last time, I have done one client. He have given everything to Saudi Arabia. They have issued all zero rating invoice, and and myself is submitted the return. Both companies were in UAE.
Yeah.
They are issued, but the performance, this magician, na, I was really surprised. During 4 quarters, he has 77 million transactions. I was really wondering. And all invoices we issue zero rated and accepted by the Federal Taxation Authority. But I just share with you few where they charge. They said we will not see zero rated, we will charge you because you will claim. So I have practically seen both things. But as per the law, our understanding that will be on zero rated. Why? Because the goods and supplies activities performed and done out of UAE. Any other question?
I have one more question.
See, before you say I have one question. Now one more question.
The VAT on the employee insurance is 5% VAT. And what about for the management
5%.
insurance? Like management insurance, there is like the higher management insurance, there is the different as per the employee insurance. Because in the management insurance, there for the partners and the top management directors, their families insurance are also applicable. So for this, there is also 5% VAT or
I had a scenario here. For example, the owner of the company or his managing director or CFO or the CEO, his wife was here, he had 3 children as well. Or the owner of a company, his insurance, he had 3 children present along with his wife. Yeah. So he got them. So what we will be doing in this scenario, we'll be saying which emirate do we belong to. Abu Dhabi has a separate rule, Dubai has a separate rule. For Dubai, it is as simple as this. As I mentioned beforehand, you cannot claim dependents. There will be a classification, they will give you a bifurcation of the fee being charged for the 4 people, including you and your family. So you will be only claiming from that invoice the portion that directly relates to you. And your family, the insurance is provided as a benefit by the company, but the company will not be able to claim it out. And will have to just directly expense it out. Furthermore, for UAE, in one of my the cases that came towards me, it was communicated to me that we will not be able to claim for more than 2 dependents or 3 dependents whatsoever. So there is a different rule for each emirate, and so we'll have to check it out independently. But for Dubai, it is that the rule is as simple as thus: no dependents.
Because there is 2 different authorities are handling. There is Dubai Health Authority and Abu Dhabi Health Authority. They have different, and again inside you have to be. They said that you have to study the agreement between employer and employee. Is there they agree like the company is going to pay dependent insurance or not? So there is a detailed explanation because 2 different authorities handling, so 2 different treatment are there. FDA is one, but there is a 2 different treatments. I think we have now sufficient session today.
Any further questions?
And
Yeah, just one question. The input claim on capital expenditure or the assets.
We'll be making relevant adjustments for the capital for the 5 years. We'll have to evaluate it. We'll give further data before I can give specific answers for the capital.
And where it will be mentioned in the return.
You have to make that adjustment during the last quarter of the next year.
last quarter.
Last quarter.
Of the tax year.
Yes. So it's you could say assets that are more than set value, and so we need to study it up before I can give you a solid statement.
I hope we have a wonderful session. Thank you very much once again to be part of this today's session. One hope. So, do you suggest we should continue this type of session?
Yes. Weekly basis.
Oh. So you want to be close our business or something like that. So we will have little refreshment like juice or water. If you allow us, I will call for the cup of tea, and we can. Normally we have at least 2-minute session. At least everyone can talk about his little brief like name and company, how long he's in UAE. It will take 2-3 minutes. We can start from. Up to you. There is no charge.
Bashir, from 8 years I'm in UAE. I'm ACM and CPA, and I'm working as a chief accountant in Tiger Group of companies, Aliver Steel.
I'm Mohammed Usman. I'm working with Alpha Group of companies as the financial controller for 3 countries, UAE, KSA and Egypt. This is one of the refresher course because as we get more school, more exposure, you get rusted. So you need to join such sessions to get yourself refreshed. I'm here since last 8 years and I'm ACC and ICW member. Thank you.
I am Smali, CA finalist. I recently, from 2 or 3 months back, I am here. I'm working as a senior accountant in Serviu.
My name is Bashir Ahmed and I'm working as a chief accountant in Al Isai Holding Group. And we have our head office in Saudi and then we have office in Turkey and Egypt and Dubai. I'm here from last 4 years.
My name is Mohammed Jahangir. I have done MBA Finance and I am on Visit Design Section Project.
Best of luck.
My name is Kashif and I am working for an agriculture-based company as a deputy finance manager, and from last 2 years. That's it.
Assalamu alaikum. My name is Faizal Ali and I have been working for last 2 years in a non-woman company. It's basically a company which manufactures non-woman clothes. I am basically working as assistant finance manager.
Assalamu alaikum. I am Zubair Akhtar. I am currently at Little Cuts and searching for a job. I did CA intern and FIFA qualified.
My name is Hassan Ali and I recently got a job last week. As an accountant, I have already 6 years experience in UAE. So just come back on the visa and proceed.
Welcome back. Best of luck.
My name is Wajid Mal. I am a visa leader. I did a master MSc Coding Finance. So I'm looking for jobs.
Best of luck.
My name is Shadri. I'm a CA finalist. I'm here for more than a month. I'm looking for jobs.
Good afternoon, everyone. My name is Mohammed Talha. I just came from Pakistan, and today is my second day. And Mr. Shafiqur Rahman invited me to attend the session on VAT because the VAT is very important for us in Dubai. So the target is for me is to getting a job. I'm searching for job. So wish me good luck and thank you so much, sir.
My name is Mohammed Hussain. I am visit for job.
Best of luck.
My name is Mustafa. I'm working in the DFCC for the last 10 years. And basically this is a very good experience.
Don't give your email. All they are ready to send you.
This is very practical. We can get YouTube and theoretical knowledge, but the theory and practice is very difficult. And it's very helpful.
To be honest, I have a lot of employees.
Job requests are there. What is the criteria for tax practitioner here? If India, Pakistan, chartered accountant and ODA, and here any criteria and any the government do any examination and what? Tax practitioner.
Unfortunately, I didn't understand your question.
Tax criteria for tax practitioner.
Good. So now this is a good question. We wish you all of think along with the job, parallel some services. This is a very good thing. Now everyone is looking second option, and it's allowed by the government. For tax practice, very simple. You have lessons having a tax consultancy activity, whatever you can give practice. But for the tax agent, then you have a long process. You have to pass the GCC VAT diploma. Then you have to pass the Arabic exam from Federal Taxation Authority. If you pass the exam, ماليات في شركة أحمد الأغبري الناجي. أنا في إمارات منذ 18 سنوات. So this is the way, because I'm going to talk with the wall, so I will not talk too much. There are 6 exams. 5, we have a lot of people, they have done the exam. If someone serious, he have GCC VAT diploma, then he have Arabic exam. Once he pass the Arabic exam, then the FTA they will give TAAN, tax agent.
Arabic exam means you have to learn the Arabic language?
Yeah, definitely. There is an exam. that exam in Arabic language. So there is a 5 question. I'm luckily passed. That's why I'm ready. If someone is really serious, I'm ready to assist him without any cost or charge. And there is then no need to find the job. People, they will find you. This is the very difference. So I'm frankly sharing my. They are more closer to take this certificate because majority of them they know the Quran, they knows the Quran understanding. So only they have to apply in practical by speaking. So thank you very much. We have a wonderful time. We will keep continuing.
Is there any time period to carry forward refundable tax, or in which period you can claim your refundable tax?
You can claim it whenever you want within 5 years, I suppose.
Come sir, Sanathan. Thank you so much.